Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instincts. It's Friday, April 24th, 2026, and the vibe was risk-on but narrow. The Nasdaq ripped higher, the S&P 500 printed a fresh record close, and the Dow actually slipped. One clean storyline here: AI and semiconductors carried the headline, while a lot of the rest of the market leaked lower. So today wasn't about stocks up, it was about who was carrying and who wasn't. On the S&P 500 heatmap, it was really split. You had these bright green islands clustered in technology and communication services, semiconductors, and the mega-cap internet names. But across financials, healthcare, energy, a bunch of industrials, and parts of staples, those boxes were more muted red. That's the masking effect in action. A handful of huge names can make the index look healthy, even when a big chunk of the board is quietly drifting lower. So what does that heat map actually mean in terms of money flow? Capital chased the highest duration, most index-effective exposure, AI infrastructure through semiconductors, plus the mega-cap platform names. At the same time, financials stayed soft, and energy and healthcare just weren't helping. That mix says the bid was real, but it wasn't broad. Traders were paying up for growth and liquidity, not bidding the entire market. And that's where the tension shows up. This was generals versus troops. The generals, AI bellwethers, and mega-cap growth overpowered everything else and kept the S&P sitting at record highs. But the troops, banks, defensives, and a bunch of cyclical areas didn't really show up. There was even a split inside the broader AI buildout ecosystem. Semiconductors screamed higher, while some AI infrastructure and more speculative power-related names just couldn't hold the gains. Now all of that rolls into a critical macro week, with the Fed decision, GDP, and core PCE all on deck. On the rumor and chatter side, the big theme wasn't one specific headline. It was positioning talk. Traders watched the narrowing breadth and started asking, is the AI trade getting crowded again? That kind of chatter can matter, because it changes how people react to any wobble in the leaders. But to be clear, in today's actual inputs, there wasn't a single verified rumor driving the session. These were just the speculative narratives people lean on when leadership is this concentrated. Intel INTC was today's gravity well. The move came off an earnings and guidance shock, strong first-quarter results, and an upbeat second-quarter revenue guide of roughly $14 to $15 billion. That surprise didn't just move Intel, it relit the broader data center CPU demand story and helped spark a semi-led surge that lifted the whole market's headline. AMD was the pure momentum tell. The stock ripped about 14% in a single session, basically a semiconductor sympathy move, as Intel's results reinforced that broader data center demand story. When AMD moves like that, it looks a lot less like cautious investing, and a lot more like traders reaching for AI beta. Nvidia stayed one of the core leaders as the AI complex retook control. The key point isn't just that the stock was up. It's that Nvidia trades like an index inside the index. When it's strong, it can mask weak breadth and keep the S&P elevated, even while a lot of other sectors quietly slip. Microsoft, MSFT, was part of that steady mega-cap support that really mattered on such a narrow day. The move fit the whole setup. Investors leaned into liquid, quality growth, and AI, cloud exposure heading into next week's macro catalysts. When a name like Microsoft is green, it helps stabilize the S&P, even if cyclicals and defensives are all over the place. CoreWeave CRWV was the interesting divergence. It finished sharply lower after a gap-up open, and at least some coverage pointed to insider selling pressure, though that may not be the only driver. For the tape, the key thing is this: while semiconductors ripped and AI infrastructure pure play didn't really participate. That split is exactly what traders watch when positioning gets crowded and selective. Lockheed Martin, LMT, fell about 3%, with coverage tying the drop to a first-quarter miss versus expectations. On a day when the Nasdaq was ripping, seeing a defensive bellwether get sold just underscored the preference: growth beta over safety, at least for this tape. Now the near-term setup next week is loaded. Tuesday brings consumer confidence forecast around 89.4. Wednesday is the Fed funds rate decision forecast 3.75%, plus the statement and the press conference. Thursday is stacked, advanced GDP at roughly 2.2%, core PCE at 0.3% month-over-month, the employment cost index at 0.8% quarter-over-quarter, and weekly jobless claims around 212,000. Then Friday, we get ISM manufacturing PMI at about 53.2 and ISM prices up near 80. The market question isn't just direction, it's durability. Can leadership stay strong if those macro headlines get noisy? So that's the wrap. Record S&P, NASDAQ in charge, and a lot of quiet red underneath. The hinge is still the same: AI and semis. If those leaders stay firm, the headline can hold up. If they wobble, the breadth problem stops being subtle. Going into next week, keep it simple. Watch the leaders, watch financials as a participation tell, and let the macro calendar do what it's going to do. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.